Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us the 6th of January 2015. As always, lots happening in the markets. We are post uh, one day sell off in the markets. Futures are flat to slightly negative this morning. S&P 500 futures at 2016.00. Bit of a retracement from the high of the morning, just above the 2022 level, again at 2016 last print. In oil, West Texas Intermediate crude at $48.73, lower by $1.31. We'll have Milt's view on technicals, both on the ES and West Texas crude. But the question is, will we have capitulation in the markets this morning and throughout the day, specifically in West Texas Intermediate crude? We have the 10-year. The 10-year below 2% again at 1.983. The 30-year at 2.547. Absolutely very strong on the treasuries this morning. The dollar higher again by 0.149 at 91.527. Folks, we are at multi-year high on the DXY, which is the dollar index versus 10 other currencies. Euro lower again at 1.1915, lower by 0.0032. So, folks, let's get in. Let's get our hands on the dough here, and let's take a look at yesterday's activity. Dow Jones Industrial Average lower by 1.86%. S&P 500 lower by 1.83. Really negative sentiment all day long yesterday. Finished near the low of the day. NASDAQ also lower by 1.57%. From a percentage perspective, perhaps not as huge move, but again, sizable enough to really take a look at technicals and have traders and investors start taking a look at fundamentals a little bit more closely as we as we look at this market in the new year. Certainly, one of the main things is oil. We'll continue to discuss this and its effect on. It's going to start to affect geopolitical nuances across the globe. Even an analyst went out yesterday, basically saying, should oil hit 40, we're going to see some interesting geopolitical maneuvers as time goes on. But again, also from a geopolitical perspective, keeping an eye on ISIL situation in Turkey, also Turkey's southern border, Middle East situation. Continuing themes here, folks. Euro weakness, dollar strength, oil weakness. So this is the play, or this is the trade that's been going on for quite some time. We have, as we mentioned, the continued euro weakness, continued dollar strength, even from end of third quarter into fourth quarter. And one of the things that we've been discussing is the fact that the dollar strength, those S&P 500 companies that are doing business internationally, as the money, as earnings are coming back, and in dollars, what effect does the strong U.S. dollar have on those earnings? Certainly, oil weakness continues. We saw that significant psychological and technical break on the 50 yesterday, and continuing on the strength this morning. It's certainly weighing on a variety of stocks and oil sector as well. Additionally, in January, we're waiting on Draghi QE in the coming months. Deflation risk, that word is coming into more and more into the lexicon of economists and traders and analysts. Before it was a lower inflation expectation. Now deflation is finally entering the lexicon, and this is something that we've been discussing for quite some time. And of course, the Grexit, the Greek exit of the euro. Is this a bluff? Is Merkel bluffing? Can and will Greece leave the euro? Is there a risk of contagion? And that's something that we're keeping a very close eye on as we get ready for the trading day, which is just about 25 minutes away or so. Also keeping an eye on certainly oil and how it's affecting Russia, specifically the Russia-Ukraine situation. We know that there has been a less news coming out from with respect to Russia-Ukraine. Also, what will happen to the Russia-Ukraine situation in 2015? From an economic calendar, this morning we had the Gallup U.S. ECI numbers, 8:55. We had the Red Book, 9:45. The PMI Services Index is coming out. 10 o'clock is the factory orders. Another ISM non-manufacturing index at 10 o'clock. 11 o'clock we have the Global Composite PMI. At 11 o'clock we have the Global Services PMI. And also, as always, we report on the Baltic Dry Index. Drops again 0.4% to 758 points. And this is something that we feel that is absolutely critical to watch. This is shipments real time as you can have, shipments, raw material, grain shipments, and it tends to be a leading indicator as we move forward on the macroeconomic side. We discussed some of these themes that's coming through. Also, you will see some conversation with respect to Russia and China. How will Russia position itself with China? Certainly, as oil continues its decline, you will see how the U.S. positions itself with respect to the new regulations and crude exports, and awaiting lots of macroeconomic news, and certainly the fact that we have a very strong dollar, weaker euro, weaker ruble. Is there currency wars that are that's really a concern here? So let's take a look at overnight markets, and then we'll dive into the technicals. In Asia, overnight we had the Nikkei following through with the weakness in the U.S. The Nikkei lower by negative 3.02%. The Hang Seng lower by 0.99. The Shanghai more or less flat, higher by 0.03%. In Europe, we have the FTSE lower currently by 0.36%. The DAX in Germany higher by 0.73%. CAC in Paris more or less flat, positive by 0.01%. The IBEX lower by 0.31%. Before we get into the commodities, energy and raw materials, and specifics on the oils, ETFs, and ETNs, let's bring Milt in with his technical analysis of the more macro markets. Milt, we saw a significant move in oil yesterday. We broke that psychological 50 level, technical 50 level. Can we start out with oil? I know it's on everybody's mind. Could we see capitulation? What do we need to see capitulation? What are you looking at?
Well, oil, it's the same routine every day. It's down every day. We've been mentioning that for since oil was trading in the 70s. You know, we consistently say that because we have an understanding that it's not over yet. It's not over yet because you have not seen that extreme capitulation bottom. You have not seen that tremendous volume burst to reverse oil to have a very strong, powerful close. You need that. That's the only way oil will, in my opinion, bottom and reverse. You need that capitulation bottom. You need that volume burst. You need strength. You need the blood on the street. It's at $49 pre-market, down 2% again. So until you have something, out of left field or something that could, turn this, it could just continue lower. Where? Who knows? 30s, low 40s, 45. Any number could be a number. People, when it was in the 70s, people were like, oh, it's never going to drop below 70. Then in the 60s, oh, it's never going to drop below 60. Then the 50s. Now we're in the 40s. So the question is, when will it stop? No one knows. Can we get a feel on when it stops? I believe when you have that capitulation bottom, you may have some sort of a reversal. But until that happens, we're going to be stuck in this doldrum of negativity and continuation selling. People really do not understand the importance of the value and price of oil. It's great for the consumers. I'm a happy camper. I filled up my gas tank for 35, 40 bucks yesterday, and I'm happy.
Absolutely.
Instead of paying 70, 80. But the repercussions of countries, of companies, of individuals, of GDPs, it is a tremendous, it could be a tremendous negative for global economy. But who really knows? Who really knows what the outcome could possibly be? We're here just to give you what we can see, the news, some technical views, and then hopefully throughout the day, good decisions are made and profits are booked. As of now, oil, it's trading right now, short-term support, can we say? But ideally, we're looking at, we need to see that capitulation bottom. And when you see capitulation bottom with a vicious break above 50, a retest of 53.60, and a continuation of a vicious rally above that number. Our levels to watch on resistance is the 50 number, followed by that large range to the 53.60, and then the 55 ideal support level. Watching those numbers, if anything is broken or if anything happens, we will make sure to let everyone know of, our feel regarding the oil. ES, jump onto the ES wagon for a little bit. Markets have been trading lower since January. Everyone's talking about the January effect. Everyone's talking about the January this, the January that. I don't care what any of that means because that's not going to dictate what the future of the markets are going to hold. Everyone thought coming into January it's going to be, popping champagne, everything's going to be continuing moving higher. Clearly, everybody has been wrong. That's why, I follow my indicators. I follow what I see, and that's what, we try to put along to everybody else and give them our feel on what we believe could possibly be an impact in the markets. ES, we are looking at 2020. I mean, not 2020. 2008, 2010 support levels on the ES. Resistance at the 2020 mark, followed by that 2035 level. We're just going to give you the first two levels, which was the 2008 to 2010 support and the 2020 to 2022 resistance to the upside. If those levels are broken, we'd like to see it broken with volume and then continuation to either side. Let me jump on the VIX, 14, 16. Two numbers we always mention, 14 and 20. 14 seems to be the buy, 20 seems to be the sell. We'll see if it continues. It's been working. Right now, we're looking at the 14 support level. Every time it goes into the 14s, it seems to be option buying, call buying up the wazoo. What happens? It reverses. It goes higher. Hits the 20 mark. Selling continues. Selling comes into the volume. It drops. Pops back up to 20. It did it already. So it's not like, you're looking at the VIX right now. It hit it. It broke above it. It came back. It closed up at 20. Can it build a level here? Possibly. That's what we're going to see. That's what we want to see. If you're a bear, you want to see a level being built here with a break to the upside. We're going to keep an eye on it. Any changes, we will let you know. Gold, above 1200, clearly above resistance levels, keeping an eye on those levels. Right now, it's in that range. Ideal range, 1150 to 1250. It's a 100-point range, I understand, but that's the range it's been in. 1200 seems to be that magnet. It breaks above it, trades above it, goes back to 1200. Breaks below it, trades below it, goes back to 1200. So that is the ideal range right now on gold. 1150 to 1250 with 1200 being that ideal magnet. Currencies, US dollar continues strength. Euro continues weakness. Right by then, those 9-year lows. We will see what happens in the euro. We will see what happens in the dollar. But do not toss those two aside. Once the dollar has been getting the strength, I guarantee the talking heads are going to start talking about the dollar. Earnings are coming around the corner. What effect has the dollar had on earnings? We will find out. What effect had oil had on earnings? We will find out. Earnings season starts next week. That's when the games begin. We'll see what happens. And until that, we're going to be in this tradable range, keeping an eye on these levels. But we'll get a better feel on the economy once earnings season starts next week, George.
Thank you, Milt. So, as we have been saying, we certainly have seen a decrease in positive sentiment in the market. Maybe this is just a little bit of profit taking from the end of 2014. Is this the beginning of a negative trade, a trend, or is this a momentary pause before the continuation of a stronger market? But again, very difficult market to really time. So always keeping an eye out on where the sentiment is, where have analysts been right and they haven't been right, and that's something that we like to pick out always. That there's no geniuses out there, meaning that you really have to do your due diligence. You really have to do your research in specific stocks and particular indicators, and really go back not just months but years, and to really have a excellent view of and an opinion of where markets could be going in the future. So let's tap into again our presentation here. What we have here is the ETFs, ETNs of oil. We like to keep them up for you and your benefit. You can certainly write them down, put them in a list, track them, and they will fluctuate in correlation with the oil, and what's really the impact on the producers, what's the impact on CPI and PPI data. Also, so let's dive into specific some commodities, energy, and raw materials, and then we'll get into specific stocks that are news that's making the rounds on traders' tables and analysts and institutionals this morning. West Texas Intermediate crude lower by $1.21 at $48.83. Just very negative pressure on that. Again, watching to see if we have capitulation there. Gasoline lower by 0.0089 at 1.3723. Natural gas higher by 0.013 at 2.895. Heating oil lower by 0.013 at 1.7353. Just a bit of a a anecdote in the Northeast. It is rather severe cold last couple of days over the next few days, so that may impact usage, the demand of heating oil and natural gas. So that's something to, at the very least, keeping an eye um, on those distillates. Gold, as Milton said, higher by $4.90, actually $5.10, just a bit of a tick up here at $1,209.00. Silver higher by just about 4 pennies here at $16.25 even. We have platinum higher by $3.30 at $1,214.20. We have cocoa lower by $11 at $29.33. The larger stories here, folks, we have, let's dive into the yields, and the yields are much lower than they have been. If you take a look at the 5-year at 1.525, the 10-year at 1.989, and the 30-year at 2.555. We are at almost a 1.5% lower than we were in the 30-year about a year ago. And that is just astonishing, folks. And that's something to keep an eye on. The DXY, the dollar index, higher by 0.288 at 91.666, keeping it, and the euro just ticked down again below that. We're in the 118 handle now at 1.1898. Keeping a very close eye on that. Let's take a look at specific stocks that are making news this morning. We have KORS. In regards to that unusual put option play that we put in the app yesterday, there was a downgrade coming. This is why we bring up option plays that are important to note. It may not be an immediate effect on the particular security, but certainly has an effect within the day or two. Also, VSR joint venture awarded $6.1 million in design, build, repair task orders by Air Force Civil Engineering Center. Verstar currently at $3.08. Let's see if we're getting any $3.19 indication this morning. Let's take a note. Also, Guild, GILD, continues higher from yesterday at $96.79. Let's see here. See what kind of indication here we're getting on Guild at $97.80 this morning. Also, NQ, we had a purchase. NQ Mobile purchased 240,000 shares of stock in open market January 5th. Currently, the stock is at $4.53. Also, in the news this morning, CPST reports securing of second major order in December for 14 C1000 micro turbines. Orders total $17 million. We have CPST this morning indicating at 76 cents, and that's in Capstone Turbine. Also, comment from UBS, expect U.S. biotech stocks to outperform again in 2015 and recommends allocation to the group. We can take a look at IBB, for example. We'll see what. So that is the Nasdaq Biotechnology ETF. That's something to keep in mind on. Also, NERV. We have a higher, rather aggressive bid this morning, higher by 65% in pre-market. Minerva Neurosciences reports data on MIN-301 compound. NERV currently at $9.40 this morning. Let's run through some of the morning syndicates that we have. ALDR, to sell 4 million shares of common stock. ALDR this morning at $28.10. AAVL to sell 2 million shares of common stock at $58.78. Indication this morning. CEMP to sell $100 million in common stock. Indication this morning at $24.57. CERS at $6.05 to offer common stock. FPRX, 5-Prime Therapeutics, currently not indicating anything yet. We are about 5 minutes away from open to sell at $75 million in common stock. As you can see, lots of common stock offering, really nothing in the mixed security shelf. KPTI offering 3 million shares of common stock this morning. News of that, so we're having indication of $36.60. GEVA sell 2.5 million shares of common stock at $99.12. Initial indication this morning. Let's run through some of the insider purchases that we're seeing after hours and pre-market this morning. VVUS, we had a $1.5 million purchase in Vivus Incorporated, currently at $3.15 in indication. AMH, American Homes for Rent, we had a $188,000 purchase. Looks like initial indication is $17.24. MLNK, we had a $200,000 purchase in Modus Link Global Solutions, current indication $3.60. STRN, we have a $365,000 purchase, nothing yet, indication rather low volume in that security. JG Wentworth, we had a $1.7 million and a $1 million purchase in JG Wentworth, currently at indicating at $9.80, and we have CO China Cord Blood. We had 2 purchases totaling about $600,000, currently indicating at $4.68 in CO China Cord Blood. So, folks, that's what we have in pre-market this morning. Let's take a quick check on futures. We have a slight rebound in the ES at by 1.5. It's somewhere between 1.5 and 2. Right now at 2017.75. So a little bit of rebound off those lows. We have crude oil lower by $1.14. So a little bit of a rebound as well. And we think as important is really keeping an eye on those yields, folks. 5-year 1.522, 10-year at 1.983, the 30-year at 2.549, even lower than a few minutes ago, folks. Big story there. And the DXY, the dollar index at 91.621, higher than we were when we began the show. So, folks, thank you for joining us on Unusual Activity. Lots going on in the markets. Powered by FinancialJuice.com with George Avedon and Milton Marmonides. Wishing you a great day and good hunting.